In a shocking turn of events, General Motors has made a remarkable impact on the industry by exceeding expectations in their second quarter results. At a time when the auto industry is dipping and industry leaders like Ford and Tesla are cutting down and slashing prices, the renowned Detroit automaker has outdone itself with substantial year-over-year growth. In this video, we're taking you through the automaker's second quarter earnings fresh off the bat and show you how GM shocked the entire auto industry. If we look at history, this isn't the first time GM is surpassing projections this year. They've just announced a second upward revision to their 2023 guidance, indicating their unwavering determination to excel in the market. To further strengthen its position, GM is taking proactive measures to cut costs. CFO Paul Jacobson revealed their ambitious plan to slash $3 billion in expenditures, a significant increase from their previous target of $2 billion. These cost reductions will involve various aspects, such as sales and marketing spending, salaries, and other operational expenses. Despite this impressive performance, the company's stock experienced a slight dip, closing at $37.92 on Thursday, with a 3.5% decrease. Initially, it had surged following the morning results, but concerns arose when Wall Street analysts questioned GM's rollout of new electric vehicles due to a supplier issue. We'll get to the supplier issue later. For now, in an astounding second quarter, General Motors delivered outstanding financial results, leaving both analysts and investors in awe. Adjusted earnings per share came in at an impressive $1.91, surpassing the $1.85 analysts had expected, even after accounting for one-time items. The company's revenue during this period reached a remarkable $44.75 billion, exceeding the Refinitiv consensus estimate of $42.64 billion. This remarkable achievement showcases GM's ability to thrive in a competitive market. However, there was an unforeseen twist in the tale. GM reported an unexpected $792 million charge to new commercial agreements with LG Electronics and LG Energy Solution. This charge resulted from sharing expenses for a recall of its Chevy Bolt EV models, which were initially anticipated to be covered by the LG companies. Despite this unexpected hurdle, the companies still managed to report adjusted earnings before interest and taxes of an impressive $3.23 billion. Unraveling the full picture of an unadjusted basis, General Motors posted a net income attributable to stockholders of $2.57 billion, equating to $1.83 a share. This figure reflects an astonishing 52% increase compared to the previous year, when the company earned $1.69 billion, or $1.14 a share. Furthermore, revenue for the quarter demonstrated a remarkable 25% surge, reaching $44.75 billion, compared to the $35.76 billion reported a year earlier. The surprising success of the second quarter also prompted General Motors to revise its outlook for the full year. The company is now projecting adjusted earnings in the range of $12 billion to $14 billion, a notable increase from the previous estimate of $11 to $13 billion. Additionally, expectations for adjusted automotive free cash flow have been elevated to a range of $7 to $9 billion, up from the initial range of $5.5 to $7.5 billion. Moreover, GM is now eyeing a net income attributable to stockholders in the range of $9.3 to $10.7 billion, compared to the earlier projection of $8.4 to $9.9 billion. General Motors continues to impress the industry by updating its full year 2023 guidance for the second consecutive quarter, painting a picture of remarkable growth and success. The company's US GAAP net income attributable to stockholders is now projected to be in the impressive range of $9.3 to $10.7 billion, surpassing the previous outlook of $8.4 to $9.9 billion. Additionally, the new EBIT adjusted forecast stands between $12 and $14 billion, demonstrating an increase from the prior projection of $11 to $13 billion. What's truly remarkable is the boost in US GAAP net automotive cash provided by operating activities, now expected to reach $18 to $21 billion, compared to the earlier estimate of $16.5 to $20.5 billion. Furthermore, the adjusted automotive free cash flow has seen a significant uplift, with the new range being $7 to $9 billion, compared to the previous $5.5 to $7.5 billion projection. To achieve this impressive growth, GM attributes its success to stronger than expected pricing, rising demand, and prudent capital discipline. However, it's essential to note that this guidance increase is subject to an important condition. GM must successfully negotiate new labor agreements with the United Auto Workers and the Canadian uniform unions this year without facing any work stoppage or strike. While the potential for progress is promising, there are factors to consider. The UAW now has new leadership, known for its more confrontational approach compared to prior union officers, adding a level of uncertainty to the labor negotiations. The expiration date for the current contracts covering around 150,000 union workers at the Detroit automakers is set for September 14th. The successful resolution of these labor negotiations will play a vital role in securing GM's projected growth and prosperity. With the automotive landscape witnessing GM's exceptional earnings and optimistic projections, the entire industry holds its breath in anticipation of the company's negotiations with the unions and the potential impact of their promising trajectory. The journey of General Motors continues to captivate and inspire, proving that its commitment to excellence knows no bounds. In a heartfelt shareholder letter, GM CEO Mary Barra reaffirmed the company's commitment to fair negotiations with both the United Auto Workers and the Canadian uniform unions. Emphasizing their long history of equitable agreements, Barra assured that their goal remains unchanged: to benefit all stakeholders, including employees, plant communities, dealers, suppliers, and investors. The stakes are high, and both GM and the auto industry are well aware of the potential consequences of a work stoppage. Such an event would exacerbate the industry's existing production challenges due to the lingering impact of the coronavirus pandemic and the ongoing semiconductor chip shortage, which has been putting significant strain on supply chains. Looking back at the last round of bargaining in 2019, a breakdown in negotiations led to a 40-day nationwide strike against GM, resulting in a substantial $3.6 billion cost for the automaker that year. This history serves as a stark reminder of the importance of reaching a favorable agreement this time around. For GM, the consequences of a work stoppage could be severe. The company could incur losses of hundreds of millions of dollars each week, and the production of their new electric vehicles could face delays, which is a concern considering the already slow ramp-up. GM's chief financial officer, Jacobson, acknowledged the challenges faced during the first half of the year in achieving North American production of 50,000 EVs. Addressing criticism from Wall Street regarding the rollout of their newest EVs, Barra took responsibility for the slow ramp-up. She attributed the delays to issues with the supplier of automation equipment, highlighting the complexity of producing electric vehicles. The automotive world awaits the outcome of these critical negotiations, understanding the impact they will have on GM's trajectory, the industry's production landscape, and the future of electric vehicles. The stakes are high, but with GM's proven resilience and commitment to success, there remains hope for a positive resolution that will benefit all parties involved. Overall, General Motors has shocked the industry with its remarkable Q2 earnings, surpassing expectations and showing substantial growth. Their proactive, cost-cutting measures contributed to an upward revision of their 2023 guidance. However, potential labor negotiations with unions pose challenges to their promising trajectory, so now we're waiting to see how strongly they come out of this. What do you think of GM's successful numbers? Do you think their labor negotiations will pose more challenges in the future, or not? Be sure to let us know in the comments section below, and thanks for watching.